Welcome back to Ferocious Education. This is Zed. Today we're going to be talking about Meten. Once more, we're talking about METX thanks to my Twitter polls. Here we are again. Now, I made a video on METX before. You'll find my previous video in the description below. But a quick thing, they consider themselves as a leading English language service or English language training service provider in China, delivering English language and future skills training for Chinese students and professionals. So they have three different industry-leading brands: Meten, which is adult and junior ELT services; ABC, which is primarily junior ELT services; and Likeshuo, which is an online ELT service. Before it was known just as Meten. Now it's known as Meten EdtechX. Now, this was as a result of a reverse merger or a merger in general with a company here, EdtechX. Now, a quick thing about some of their latest updates, and this was actually from a previous of their operation slideshow, so it's not really quote-unquote latest, but they consider themselves as #1 omni-channel general adult ELT player in China. They have around 1.1 million registered users, more than 16,000 online teachers, more than 45,000 enrolled students, and a revenue CAGR between 2016 and 2018 of around 113%. Now, I can go over and over, and I did go over a lot of these things before, so we're going to skip out of this and try to take a look a bit at the fundamentals in some of their SEC filing. So first off, on the latest SEC filing coming on the 1st of November, the following discussion analysis of our financial conditions and result of operations should be read in conjunction with our consolidated financial statements. Now, I'm going just to read the first parts here and there, and I'm just going to take bits and out just to give you an idea about their operations. So the Government of People's Republic of China, or the PRC, has a significant authority to exert influence on the ability of a China-based company such as us to conduct its business. Therefore, investors of our company and our business face potential uncertainties from the PRC governments, changes in China economics, political or social conditions, or government policies could materially and adversely affect our business and result of operations. Three risks could result in a material change in our operations and or value for securities, or could significantly limit or completely hinder our ability to offer or continue to offer securities to investors and cause the value of such securities to significantly decline or be worthless. Basically, they're just giving a quick assurance, or actually more of a quick warning, that hey, by the way, in China, this is a Chinese company and the government has all the say, so be careful. Anyway, they also go on further and they say, we have established ourselves as a highly scalable offline-online business model. We have a nationwide offline network of both self-operated learning centers and franchised learning centers. As of June 30th, 2021, we had established a nationwide offline learning center network of 92 self-operating learning centers covering 25 cities and in 15 provinces, autonomous regions and municipalities of China, and 10 franchise learning centers across 9 cities in 9 provinces and municipalities in China. As of June 30th, 2021, we had approximately 1.9 million registered users on our Likeshuo platform and cumulatively over 340,000 paying users who purchased our online ELT course or trial lessons. As of such date, the cumulative number of student enrollment in our online ELT course since 2014 was approximately 200,000, and we had delivered over 6.05 million accumulated courses hours for our students online. Now, this gives you an idea on who they are. I'm just going to move forward from here. Taking a look into institutional buyers, there's no activity so far in November, and in the last week of October, Fidelity Nasdaq Composite Index Fund has actually around 47,000 shares here. Now, another thing is the short interest ratios. We have 0.02 days to cover here, and we're able to see that around half of all the volume traded, half of it is going towards the short selling side, and there's a very small short borrow fee rate. So short selling isn't really, or short sellers aren't really considering that interest. It's very minimal. Before moving on towards technical analysis, if you would like to see more contents like this, make sure to click the subscribe button and leave notifications on for this channel. Also, don't forget to drop a like if you've actually enjoyed this video, and you can join our Discord totally free in the description below. Now, another thing I do want to talk about is their short interest as a percent of float. It only appears to be 5%, but the price over sales is highly undervalued at around 0.45 when the SP 500 average is around almost 5. So you're able to see this company is around 10 times less valued than the entire market, and it's seen a really good day today. And let's move on towards technical analysis to discuss just that. Now, from a technical analysis, what we're actually seeing here is that the 10 SMA is being above 30 EMA. So moving averages are starting to look really bullish. Between the 10 SMA at 0.54 and the 30 EMA at 0.45, there's something called a trading action zone, and that's very bullish as well around here. And on the EdtechX, the average directional index, you're seeing it a little bit starting to pick back up, and that's a bullish sign. It suggests that there is a likely of a possibility or a possibility of a trend to continue on forming and pushing. Willing percent R, which is very similar to relative strength index, is showing to be very, very close to overbought. Now, that's not particularly a bad thing in this situation. It's showing there's more buying than selling happening. That's not a bad thing in overall. And in terms of MACD, you're able to see that it's currently rejecting what it was a negative momentum and trying to climb backwards on that MACD push. And the next real fight would be in the 75 cents. Now, momentum has actually climbed up back almost to an all-time high of 0.3 for a while. It has been a lot lower ever since the massive drop that it's seen, but 0.3 is a good point to be at this level. Now, in terms of stochastic fast and stochastic slow, both are actually pinpointing upwards, and that's a bullish thing to see, a really nice thing to actually see with this one, and it really suggests there might be another leg up for this one. Similarly, the moving averages and the Bollinger Bands are climbing upwards, and that's a good thing that we're seeing. We're able to see that the moving averages are expecting this one to trade between 47 cents and 38, but are going upwards and higher almost every single day. The Bollinger Bands are expecting this one to trade between 0.67 and 0.18, but again, we're looking for the upward moment rather than a specific price point. Now, on Fibonacci retracements, we're able to see a significant support at the 57 cents and the 46 cents. Resistances are at 66, 75, 88, and 104. Price line actions, we're able to see critical supports here. So the first critical support that we're seeing is sitting at 0.62 and then 0.60, a very hard one. If it breaks, that might be a trouble. 0.58, 0.55, and then 0.54, and then 0.50. You drop just a bit down towards 0.45, and then downwards to 40 cents, and then downwards to 35 cents, and then downwards to around 32 cents and 28 cents. Resistances, you're able to see one at 63 cents, going upwards to 66, and then to 69, and then to 74, and then to 81, and then 88, going higher to around 94, 97, and then $1 is a sharp point. And why is it a sharp point? Because we ultimately want it to be above $1. That is the compliance limit. It needs to be above $1 for 10 consecutive days. Otherwise, it really risks delisting. Now, this timeline or ticking bomb isn't really in any time soon in general, but you do need to see a strong push in price. Otherwise, a reverse split is imminent, and a reverse split is always bad. Now, where do I see this going? I definitely see this momentum and volume and volatility pushing forward, and it might actually reach back to the $1. But you're able to see historically, just year over year, you're able to see that this one started back in around April 2020 around $24 and currently trading around 60 cents. That's a problem, especially even then if we're comparing between June, where it was at around $12.60 to 60 cents, it can likely reach $1 or $2. But the question is it a long-term investment? I'll be very careful if I were you. The stock definitely has some things going, whether it's not fundamentals really, it's more off what the market sets the price for a Chinese stock. What do you think about this ticker? Make sure to down in the comments below. Share, subscribe, and like, and have a wonderful day. Now, if you're still here on this video, make sure to drop down below and join our Discord. We have a lot of different things going on, including, for instance, members that gives picks for free. It's not pump and dumps, we just things we think about, swings, etc. We also have really exciting bots. You can actually use those ones. For instance, we're just testing out this bot, for instance, that gives you Fibonacci resistance points, activities, etc. And we have a bunch of free things, totally free. We run on tips here, and you can ask me questions, suggest stocks, etc. It's a really nice community that has been growing up very fast at a very good rate, and it's totally free. If you would like to join that one, feel free to do so in the description below, and have a wonderful day.